Okay, so this is video number 2. We're going to talk about how do I use candles, since you guys know how to get the closure and the open, how it opens from the bottom, right? The green candlesticks, as I mentioned in the last video, which is video number 1. Just trying to give you guys 5 videos on how you guys are able to be profitable as a trader. Just keep it plain simple on the bigger time frame. And we were talking about candles, right? There's like, I told you guys to investigate on the rest of the candles. Obviously, you're in my Discord. I have a whole what's it called? A whole list of what candles I use, the patterns. But first off, in the first video, just to give you guys a little recap. This is the open, right, of the green candle. It moves up, closes at top. So it opens here, closes at the top, right? So you guys won't get confused. Let me show you guys this again. Just a little quick recap before I get into the other. Before I get into it, I'm going to try to show you guys how to use those candlesticks as levels, and how I use them on every day. You know, I use them not every day because I do use support and resistance, supply and demand, but this is just the basic technique so you guys can know how candles work depending on the time frame and why you're supposed to wait for the candle closure. Okay, so basically this is the open, right? Open, the open at the top too. This is reverse because this is a red candle. It opens at the top, and then this is the close, right, for the green candle. Close at the top, and this is open. I mean the close at the bottom. So it's reverse. So simple. I'm going to show you guys a real nice example of how this candle here shows you a bearish engulfing candle. Okay, I'm just going based off of the candles that I see, the candle patterns. There's a bearish engulfing candle, and what does happen, let me go back, right? So how do you know when to get into a put or not? This is a 4-hour time frame. The 4-hour time frame is allowing you to see the bigger move from the outside of what could occur inside, right? So this is the 4-hour time frame. In between this, if you go to the 5-minute or 10-minute, 15-minute, 1 minute, whatever's, you're gonna just see the inside of this candle or what's gonna form. So far here, this is a inside bar because you get green, red, and green, and you could get another green back to the upside. In this case, it didn't happen. So what I would do in this scenario, in case I want to get calls above this day, if it's bullish, let's say I'm bullish, right? Obviously I'm gonna be bullish because I still see, obviously we're going in an uptrend. It's just stopped here, and I could expect another green one. Obviously we got a red after the market opened, but what I would do to get in, obviously on the 4-hour, which is the biggest time frame that I love using, what I'm gonna do is get a level right above where that candle closed and where this candle open, right? You could do that to actually know what the market's gonna do the next day. So far, if it goes above 457.38, you could get calls below 454.87, which is a $3 move in SPY. You could get puts back down to another candle that I see here, right? But so far, this is the biggest push. But I'm gonna just talk about right now the candles, how I use them, closure and closure, how to hold your levels, and why you need to be able to know how to wait for the candle. So now this is the 4-hour, obviously a close. In the 4-hour, obviously you're gonna take a while for you to get in, but you want to be able to enter while you're trading, right? The 5-minute, 10-minute day trade around this area. So what you would do is go to the 5-minute or 15-minute time frame, and look how this ended up doing, right? So what happens here is that what I like doing on the 4-hour time frame is that, look, I'm gonna show you really quick. 15-minute, right? 15-minute. See the pre-market, it opened up, came back down, right? It's holding. And what do you see here? You see that it was rejecting that 454.76 right on the 15-minute time frame. Reject it. You could take in some puts, but since it has a big long wick like this, that's kind of sucks because I will use the wick for my exit, right? This will be an exit. I'm getting puts because it's dropping down. So far, you would have made some money off this one candle itself, right? But the thing is that when you go to the 4-hour and you're seeing this, how it moves on, honestly, I like giving myself some space. I like giving space on what the candle does, especially when it comes to this position right at the open. So at the open, what I would have done is I'll get a level here, right below the wick, exactly how I told you this candle. But you can see how it's sustaining that resistance at 457.30. So I'll have these two levels, like basically 452, 454, 457. Right, and if you want to see what's below it, you can get this candle closure also, or right all the way at the bottom, because you can see the more of the touches, the better. Right, there goes your touch here. Right, 1 touch, 2 touch, 3 touch, 4 touch. That's a strong support. Why is it support? Because it's below. And there you go, the candle close. Right, we're gonna wait for the next day to see what's going on. We go to the 15-minute, and then you can see, you can see that daily, I mean the 4 hour, I keep saying daily, but that 4 hour from yesterday, this move, you know that if it goes below 454, we go to 453. That's why you like taking profits, because the thing is that you know that buyer stepped up here and created another candle, right? So guess what? This would have been your trim if you're getting puts. Perfect, nice entry. That's why I like having these big levels right far apart, because if it does drop that 452, we go next back to 448 or in between this candle, right? Because this is where it popped up open. This one closed here and then popped up right at the open. So now I will wait 457.30 to continue to a bullish trend. This is what happens when you don't know your candle. So look what's going on, right? The market opened. You see it at pre-market, this gray area, the orange area. You see that it's holding that rejection area at 457.30. Right before the market opened, this drops, right? So if I see this, it's like, okay, it's rejecting. But I know that on the day before, this is where it broke out, 452.98. So I would look for a bounce in between 454, 453.00. Why am I going to look for a bounce? Meaning the market's going to go up. The reason why is because, like I told you, I know that this green candle, green, red, green, you get another green candle up. Another one like this. So I want to take it for calls. And if it closes below this one, we fall down back to 448, right? So we have this space, a good amount of space to think of our decision of what's going to happen, and we're going to make calls or puts. So I already expect this one. So that's why I'm getting myself in my head is already ready for calls. Obviously, I already know that 453.07 is the way to go puts, because that was the low of the day, of the other day. So now look, what happens? It falls down. You get your entry when the candle closes, and obviously you know that it closed where? Right there, right? It closed right there and then opened above. This is where it tried to open on top, because if sellers were coming in. So this will be my stop. Right above it, give it some space. Right above this area, right? Look what happens. Drops, gives you that red. And this one, I'm not sure if I'm able to go back so far in time. This is February 2nd. Oh yeah, it's barely. So I'll go to February. Go to the 5-minute and look what happens when you use multiple time frames. My entry would have been right here. Entry. Look at the 5-minute. I have the 15-minute on the side. It closed. My entry here. And look what this does. It's showing you rejection. But this is where you start putting your stop losses more to the bottom side. So you would take profits. You would take some profits or leave it for your loss. Just know that every time you get in, have a risk management already set up. So if you would have gotten in with 10 contracts at $1,000, then just know that if it's 10% right here at your exit, right above the wick, right? Because you entered here, you entered right there. At this where the puts right there, this would have been this candle. You entered there. This is where it closed, drops down, you're in profit, and then you want to hold it back to your level. So at this point, it looks really good, right? But we got faked out. What happens here? It comes back up. But that's if I wanted to get puts. Why did I get puts? Like I said again, I got in for puts because I saw the 15-minute candle. This is the scalping way that I do in the mornings. This is the quickest way you could do it. Go to the 5-minute and the 15-minute. I have both of them available, and you'll be able to close here and scalp. Since this is a scalp, I'll get out really fast here, right? But since I'm bullish, I wanted to hold this area. So far, I would not even get in. I wouldn't call anything if I'm bullish. Okay, I see this drop. There's no candle, hammer candle that's going up besides this candle that got in. But then you can see that it's not as strong, because as soon as it closed on the 5-minute, it's showing you a wick on top. So I would wait. Drops again. This one is not really a hammer because it's not picking up anything. Drops again. So now if I start seeing this, I'm like, okay, I wanted to bounce at 453 for me to take calls back up to 450, 457, right? This is a scalper's area to get in, to drop, scalp, leave a runner, and that runner would have printed. You see that runner would have came back down straight to that 553. So now, to take calls, you either take it at this bullish engulfing area, this whole section, take some there, and you can also see it on the 15 minute. See, so bullish engulfing, this candle covered this one. Like I said, candle closure. This one closes on top. That's why you need to know your candles. This one closed right there, right? Close on top, and this one closed at the bottom. Open at the bottom. Why is it like that? Because it's backwards. This was red and it tried to make it green, so now it's on top. It closed right there. Remember, it closes there. So it closed right at 453, not on top, 453 at the bottom. 453.91. So if it goes below that, I will put my wick. So obviously my stop loss will be right here, because the next one it comes out green. So now that I got this green candle, I know that it's bullish. Why? Because now it's closing below the other candle close. That means buyers push the price up, right? So if they were here, buyers were here because it's where it closed. It went up. My bad, I'm trying to cough. And then went back up. Boom. So now guess what? Buyers right here, so you can expect another green, and there's your green. There you go. Now it's holding your level 454.68. So there's no reason for you to get out. Yeah, this red one looks kind of scary, but honestly, I would have held and just keep holding it, because look what happens. It rides back up at this position, at this big green candle. I would have gotten out. Start trimming some here and leave the runners. And look how ended up going to 457.70, right? And that's just at the open, from 8 all the way to an hour into the market, an hour and 30 minutes into the market, using the 15-minute time frame, right? So the same way you get in for the daily, you saw how I did my levels on the 4 hour, my bad. On the 4 hour is the same thing you do on the 5 minute. Same thing. If you see a candle closure above it, then that's what you get. Same thing here, look. But you have to wait. Bullish engulfing, next one's green, there you go. Drops down, this one covers this one, but you still have sellers on this section. Drops again, candle covers. So it's choppy on the 15 minute, on the 5 minute. Go to the 15, you're able to see and hold for 15 minutes longer. That's why I love the 15 minute. This candle happened in 15 minutes. It wasn't in 5. This one happened in 15 minutes. So even if you miss this move and you get another green, then you know the next one could be green. But this is the thing, that you have to know that if you do get in when this candle closes, which is on top, again it closes because it's green, you have to put your stop loss below that candle. Look what happens. This one never takes it out. It's holding your level that you made on the 4 hour. So it comes and comes back up. You would be red. Obviously you're going to be red because your entry was long. You're going up, but your stop loss is below that candle. You're exited all the way on the top, and you're halfway. But the thing is that you want to know how to read the candles to be profitable. So now there you go. That's the 4 hour, right? That's the 4 hour. Go to the 15 minute again. We have our levels. It was holding. It came back up exactly how we wanted. Bounce, held, came back to 457. So now if it goes above 457, obviously we go above another level. We're gonna talk about that, about resistance support, in the next video. But this is video 2 about the candles. Why you need to learn them. 15-minute time frame again. Let's see. See, we got a big red. This is market close. So a big red, obviously you will not swing anything here. If you want to swings, you will not swing because you can't get another drop. So now, there you go. So remember those levels that we did on the 4 hour. So now you know that below 452 and above 457 you could take calls. Okay, so now we keep going. Let's see when the next day opens. Okay, there you go. Pre-market came in, and what happened? It's closing below 452.97. That means sellers are all up on here now. The first time it actually dropped it, we would go straight down to 448. So now we go to the 4 hour again, which is our next day, right? And we already have those levels. If it closes below that 453.08, we get puts again. So now pre-market hasn't opened. Market hasn't opened. Let's see what's going on. Market hasn't opened. Still has time. Still has time. Market still has a little bit more time. Let's see. Okay. So now We're in between. Why are you gonna trade in the middle of nowhere? So there's the reason why I use those 4-hour levels. Right? So now look what happens here. You get a bearish engulfing, but it never went below, like if you would have gotten in for a call, right? Your stop loss. Hold, held. This one is going green and red, green, red, green. So next one you could appear a green one, right? You want a green one to come next. So your stop loss will be there. That's the thing. We're in the middle, which sucks because I like buying right at the bottom of a level. I really love buying here when it's at the support or at the resistance to get rejections. I like buying the bounces here and setting the rejections to drop down. Unless I get a breakout, then I take it to the top. But so far, I know that there's a bullish engulfing now. After like 30 minutes after the market, you could get a green one next, right? See? There's my green. What did it do? Hit 452. If I got in, that's 15 minutes later. I got in at 451. Took it at 453. $2 up in a contract on SPY. That's $30 per contract. I play SPY all the time. So that's $30 per contract. That's $60 per contract. See, so now you could trim there and leave a runner. See, so now you're looking at it again. Now you're seeing this is a doji. You know your candles, doji. It's an indecision candle. If it goes below this open, you get out 451. Below it. See, below it. That's why I like giving this some space. I like giving this some space. Give your trade some space. Don't try to put it right below. Give it some space so you will not get stopped out, because market makers are going to try to do that. But there you go. That's it. You got stopped out. You made profit off of one. You made $30, $60. If you bought 2 contracts, you left 1 runner. You locked in 60, and the other one is break even. Basically, like 10. You probably lost like $10, so you made $50 in total. See, so now you should wait. You see why I like buying at the top, selling at the top, and then buying at the bottom. Now look what this is showing you. This is showing you hammers, 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 and hammers. Hammers, hammers, hammers. This is when you go to the 15-minute. And now what happens here? First off, you want to check the bigger time frame, like I said. Bigger time frame. You saw that it rejected that candle. Below this candle, we go straight down to where we said 448, right? 448. We got another candle right here on this section, 446, and then come back here, 440. What happens? Drops, hammer, hammer, hammer. This would have been a nice move for it to get calls, and there's a reason why you shouldn't get into one hammer or two. You want it to show you that it's gonna hold. Okay, so since you could see that it's doing a downtrend right at the beginning, why do you want to get calls when this hammer does look nice? I ain't gonna lie, it does look really good. But the thing is that when you do get your calls, you might get destroyed because you're not waiting for a better confirmation off of this candle. Usually when you get a hammer, you already see what happens, right? When you get a hammer like this one, you get a green one next, right? That means it's good. It's closing above the other hammer. The hammers, these are coming in, but nothing is coming above it to close to show you that bulls are buying it. So if you do get into one of these, especially this one or this one, have your stop loss below that wick. Look, you would never stopped it out. When this came back up, you would have noticed that they're showing sellers compared to what happened on this other candle. Way greener, way better. A little bit of sellers on top of that wick compared to this one right here. Correct? This one shows a little off, so I would probably trim and just be like, you know what? I'm going to get off. I'm not even going to hold it. And then look what happens. Flushes. So now how do you get out of that? You put your stop loss in between here to leave some profits and get out. Right? That's why I love trading the candles. And then there's your candles the next day. Same thing. You want to see what's going on. Right? You want to see what's going on with the candles, with everything moving forward. Below this 445, we get puts. There you go. 446, I mean. 446 shooting star and you drop. How do you hold? Is by the closure. That's why you have to wait for candle closures. 5 minute, 3 minute, 5 seconds. It doesn't matter. The same thing that we did on the bigger time frame. Imagine this was the bigger time frame, because I said 4 hour. The 4 hour at least allows you to see what the market is gonna do next. You're able to see where it's gonna go, what target is gonna move to, and what's going on. Look at the drawings. See, bearish engulfing candle. You know the next one is gonna be red. If you would have looked at the candle, obviously we had our levels, right? We had it from this green one, had one there, one here, and one there, right? So now, if you would have seen this candle, you're like, oh damn, we have a bearish engulfing on the 4 hour the day before. We might go red tomorrow and flush to 448. Why? Because usually after a bearish engulfing, especially on the bigger time frame, you get a red one. There's your red candle, flushed, and that's what we got. That's how you gotta follow the trend. This is all scalpers range right here. When you see a call get in here and everything, I would have never gotten into calls unless it breaks above this 452, because I already know in my head that on the 4 hour, like how I showed you that earlier, that this one showed me a bullish engulfing. What happened at the end of the day, it didn't come up. It didn't give me that green hammer just like earlier when I showed you guys. It just dropped, gave me a bearish engulfing, so now I could expect another red one. And usually that red one comes into the size as the one that came in as a prior candle, so it'll be the same size as this. $4.83. Put it below that breakout with that candle close, which is right here, right? I already have it. Thanks to this candle, I have it there. Drops. Where does it stop? 448.01. That should be your next candle that's gonna come in. What the hell happens on the 15-minute? Look at that. Comes in, boom, straight to your target. That's how you use those candles. I said I was going to talk about patterns. I messed up, but I'm going to talk about these candles, how to use them. So now that's using the 4 hour. If you want to swing and see what the market is going to do, this usually helps you. The 4 hour is to help you to see the next day. 4 hour to see the next day move. Okay. Next day up to 2 days, literally. So you could swing this on small accounts. This is really good to use the 4 hour to see what's next. Okay, you say bearish engulfing, I'm gonna swing it. Sucks that it did a pre-market, but you could have swing it to 448. Look, 452 for 448. Sometimes it doesn't move in 1 day, sometimes it doesn't, but you do want to get those puts. The other one that you have is here, right? 440. That was smaller account. Get some puts from 440, and look, you would have been saved for 2 weeks out. Get in there, look, 1 day, 2 days, and you're still here. And once obviously it goes above that 448, you could get out. Let me put pause. There you go. And look how those levels react. Stops again, gets in. You know that it's holding, goes back up. It's rejecting those levels really nice. So now that's what the 4 hour does. It shows you what the next day is gonna do. So now, next day to 2 days. Now you want to check the weekly, right? The daily obviously is the next day, even way better. But sometimes SPY looks like shit. Look at what SPY is doing. Just by looking at candles. You see what? I don't know why I deleted that. Now you see how SPY is doing it. So you want to trade bigger time frames, you do the same thing with SPY. Try to get the closes and the range. One there, another one there, right? You see how there's so many touches there. Second one here, and then right at the bottom. So you have bigger levels. See that? Then you go to the 15-minute and look, you will see them. But I don't like the daily, because on the daily you won't be able to see these moves. Sometimes it doesn't happen. Like right here, look, you see it's just going in between. And it jumps back up. So I like using the 4 hour. The more cleaner pattern, the better. If I don't see anything, obviously here on the 4 hour, you can see it. You can see using support and resistance. Support and resistance, but I was showing you candle by candle. Obviously, once you have your support and resistance, you do your what you gotta do. Touches here, more touches there, another touch there, right at the rejection here, and you have your place. But using candle to candle is going to allow you to hold longer in your trades. That's what people don't notice and don't use it. Same thing here. 4 hour, what did I say? it gives you 1 or 2 days moves. This one gave you a bearish engulfing, right? Bearish engulfing. There you go. 2 days. A little black area here, that's 1 day. 2 days. Drops. Right there. 446, you go to trend 1 here. But it went from 455 to 446. Now you get a bullish engulfing here. 2 days. 1, 2. From 449 to 457. You get a 2-day move. So now you go to the daily, like I was saying. You go to the daily and you will get a day. But this, I don't see nothing. The only thing I saw was probably this bullish engulfing. They give you that pop-up. But the thing is that for the day, you have to wait for the day to end. Literally at the end of the day. Like when the market closes, like literally like at 5 minutes before. Or like even 3 minutes before you know the close. So this daily would help you for the next day also. To see what's going on. So if the daily doesn't look like, if the daily looks like crap, like this, you don't even know what's going on. There's not even a pattern. But if you go to the 4 hour, you probably see it more smoother. Weekly is for more farther away contracts. Look what happened here. What did it do? 2 weeks later, the other one gave you a red. Your stop loss, like I said, the same thing. Right above here, because you enter there. Right above this will be your stop loss. That's how I'll put it red. What happens? Goes up. Doesn't even touch. But you'll be looking at the weekly. So now you know, okay, you wait 1 whole week. Monday through Friday, depending on what time your market's open. Monday through Friday, you wait. Close as a doji, so now you don't want it to close. Luckily, it closed below this one, so you're good. And there you go. You get the next flush for the whole week. So you would have caught this move from 467, 468, all the way to 430. That's 30 days out. But the thing is, since this is weeks, you gotta remember, it takes weeks for the market to move. Like this day, what happens here? 1, 2, 3, 4, 5, 6 weeks later. So you want to get like a month out, 2 weeks, 4 weeks out, a month, even better, and just leave that play through the candle. Like I said, the candle movements from the inside usually it measures where you're gonna get after. So let's do it again. Let me find that. Can't even find it. I lost it again, man. Let me see. God damn. Right here. Price range. Candle to candle. The next one. There you go. After that, candle to candle. The next one. There you go. Stopped a little bit halfway. Not bad, but that's what you usually get the next candle is that move. So now since these two happen, you measure the top from this one and you put them together. Because you know they're both bearish. And you measure this and top of that. Same way, and now you put it on the next one. That will be your next candle. Look what happens. Where does it stop? Right here. See that? Right there. And right here. That measured these two movements. This is just an algorithm. The market's an algorithm. You need to know. That's why you need to know how to play it. The candle closures, wait. Not all the time is going to be a pattern. Same thing, like, I don't know whoever plays video games or not. Not all the time you're ever going to be able to fight the same boss or whatever with the same technique you did before. Right? But then once you know that technique and you know his moves of the whatever guy you're fighting or animal, whatever it is that you play, it's going to work all the time. But you have to wait for there's an opening. Same thing with the market. You have to wait till there's an opening. You have to wait for it. That's the only way you win, and you could predict the market by looking at the candles. Okay, let me see the 4 hour. Okay, cool, I go to work. I like the 4 hour better because that's going to show me what the next day is going to do. And especially before the market closes, you're able to decide on a swing or not and hold it up for 2 weeks or no. Okay? Monthly, same thing. You could use any time frame. The whole point is that you're supposed to follow candle by candle. So now imagine the 5 minute. 5 minute right here. What happens? Bullish engulfing. Just know that you have a 5 minute candle, so you have to wait every 5 minutes for the candle to close. So now you have a prediction of what's going to happen. So now let me show you the 5 minute. Imagine like if this was the weekly. How much did I said? If it was a 4 hour, you take 2 days off, right? 2 days move for that candle to come in. What happens when it's a daily? It takes a day, obviously. The whole move day, obviously up to 2-3 days, depending on how big or the size of the candle it is and when it closes. The weekly, obviously weeks, right? So this is the 5 minutes. So now what do you think the 5 minutes is gonna do? You get one green candle next, right? After this, bullish engulfing, right? Bullish engulfing right here. Bullish engulfing, get another green candle next. The green candle next, and you see that this is a resistance. But the thing is that you're playing on the 4-hour time frame, so you know where it's gonna head. So that's why, to me, all I do is follow the candle that's showing me that's gonna go up to reach my target on the 4-hour or 1 hour. I use the 1 hour and 4 hour, but I'm showing you guys how the 4 hour works on this video because I do want to talk about the resistance and support on video number 4. But the third one is gonna be patterns with these levels that I'm gonna use. I'm showing you guys these levels because this is beginner levels, which is good. You have more space and more time to think about your reaction, and don't trade until it hits the support or resistance. Support resistance, you guys should know, especially if you're in the Discord and you're watching this video, because the only one that gets access are the ones that are in the Discord. So now what happens, you get a green one next, your stop loss below here. There's your green one, right? 5 minutes later. 5 minutes later, so what happens, right? Position, you enter when the candle closes, your exit will be below it. There you go, boom, up. How many moves? How much do you get from 452 to 453? It's still bullish. Why? Because there's no rejection. There's no nothing. There's no rejection on top. It should literally destroy this little level, I guess, if you really want to capture it on the 5 minute. But I wouldn't have it because I already have my bigger levels, right? So then now here, this is what happens when people get scared. So now you're up already. Look, you're up $2 on SPY. Do you want to hold or you want to sell? At this point, you want to notice that this is our sellers coming in. Not too aggressive because it's still closed above this, right? It's still closed here. That means buyers are still holding this position here, right? Because you entered at the bottom. They're holding this position. You entered here, right? Candle close, closes on top. What happened? Buyers came in, pushed it up, closes on top. So now expect this. Buyers are there now. So now we're buyers right there on this candle. This whole candles are buyers. What happens? Push it up. Now there's our buyers there again. They closed above here. So you could still see another green one, or start putting your stop loss. If your stop loss was all over here, guess what? Now you could put either a break even, which is where you entered, right? Your stop loss was here. Stop loss. So now you raise it up to there. Now you break even. So now from there you could raise it up either on top or half of the candle and still hold all your contracts. So if you have 5 and if you're up $15 per each contract, you already have like over $60 made if it hits your stop. But if it goes above, then you're up 120 or something, right? You're double, obviously. So now guess what? If you're expecting the other green one and hopefully the market is bullish and not choppy, you will get the green one next. If not, you're going to be green there and a stop shot, and that's it. You're green on the day. So now you're still holding. Why am I still holding? Because it's closing and we still got a doji. So now at this doji, what I will do is raise it a little more higher, because usually a doji is an indecision candle. So I would never be red at all on this play. Either I hold it all or I trim. Sometimes I trim, sometimes I don't, depending how the market looks. So at this point, I'll probably just leave a stop loss there and leave them all there. There you go. Boom. There's your other green candle, right? And given a decision candle, closed above it, bullish, right? So now your exit, if you would have entered on this doji, you would have been below here. So my stop loss is, I'm using this candle because I'm green ever since this candle appeared. So now put it halfway because I don't want the other one to give me a wick and stop me out. And look, if I was up $15, guess what? Now I'm all the way over here. See? So now I'm green all this move and I'm holding all the contracts. That's a $3 move. That's $30 per contract. If I had 10, see, if I had 10, that's already for the count 10 contracts from 452 to 455. If I sell there for some reason, I don't know why I would sell, that will be it. You see that? And now I could put my stop loss probably right there because I want to do max profit. So now we'll be up $150 or be up to $400. So guess what? If I'm up 400 and something, I'll probably put my stop loss right in between there to make $300 instead of 400 and see if it's going to hit my target because it's so close, right? There you go, another doji. So now I'm going to raise my stop loss again halfway and I can make $360, right? To see what's happening. There you go. It just keeps going aggressive. Now what? I have 10 contracts and probably up $700, $800, almost $1,000. So what would my risk look? So now you put your stop loss here. I'll probably start trimming. Why? Because we're so close to 457. Look at that move. Amazing move. Super nice. So now my stop on this one, obviously I'm gonna keep it right all the way at the bottom. Probably right here, break even, and just see what happens with the market. I will take my trims completely off here. More than 75% all my contracts, lock in up to like $800, $700, and I'll just have my stop around this area. And let's see what happens. Just watch it. It's nice, smooth. See? So now if it hits here, so to me I want to get out of the runner. Get out of the runner. There you go. Complete move. Complete move. This right here, from there, that was 100%. So you put $1,000 in, you get $1,000 back from there to there. That's why I don't get out. I'm not bearish even though this goes red and red, because it's not going below what I want. See? So it's up to me. I want to put it there or raise my stop loss, or maybe hold that runner depending how far is that contract. And I'll leave the runner I want. So depending, because it's just for free. You live one runner there for free, and if it stops, then you don't lose money because you entered here. You entered right around here, and you fucking held it all the way to the top, or trimmed here, max trim, because you're so close to your target. Sellers might start coming in, but my stop loss is above, like probably like 20% green. And look, you just leave it, and that's it. Free money. It still doesn't hit until probably like 3 hours later. That's when it hits, and done. That's why you use those candles, and that's how I'm able to hold. Literally, that's the only way you're able to hold, by learning those candles and waiting for them to close. If you see and you're able to predict, so I want you guys to practice the bigger time frame, 4 hour, 1 hour, and see, okay, I see this candle pattern, this movement, then you get in what you see, you know? And I'm going to, on the Discord, you guys on my Discord, you're going to have, I'm going to give you guys this from the masterclass that I used to have, where it has the confirmation of all the candlesticks, which is literally this. If you're watching this video, then good thing. You know, you're going to follow through and you're going to make money. Trust me. Just wait for the candle closure. This is the most hardest thing that everybody does. That hates on, like, they just don't wait for the candle closure. And you'll learn how to use a proper stop loss. And there you go. Look, this is everything I'm going to give you guys. It's going to be on the Discord. Right at the bottom, I'll tell you when to get in and out. You see? Now that you know why there's a hammer, buyer stepping up, and where you put your stop loss, and look what happens. You could take it all, the whole position up. So I'll put this for you guys. And yeah, like, I really hope you guys take your chance and actually review everything that you guys are doing. Right, you guys? So hopefully this helps. Next session is going to be patterns and levels. Actually, levels or patterns, depending. But this is session 2 out of the 5 videos. In practice, don't wait for me to push shit. Like, literally for candles, I'll put the candles that I use. I think I talked about it so many times, because in this Discord that I'm talking in right now has been up for free for 4 months, 5 months. That was my mentees Discord, and we decided to help you guys out, and this is what it is. And yeah, this is gonna help you guys out. Trust me. Wait for that candle close. Wait for the candle closer. Put that shit in your head. Wait for candle close. Look at the bigger time frame and look at what the candles are telling you, and you know what the next day is gonna do. You'll be prepared mentally. And if it doesn't go your way, you just be like, oh, what the hell's going on? And that's it. Just wait for it to go to your move. Just keep it simple. Don't get distracted of all the noise that's going on. And if you guys just noticed this video, I don't have any. If you're able to analyze what's going on right now in this video, honestly, look, what indicators am I using? Figure it out. What indicators? There's nothing. Zip. No volume. No EMAs. So, surprise for you. If you're able to read this, I think this year is going to be your year, and you're going to be profitable if you do follow what I say. Because that's literally it. Alright, you guys, take care. Have a safe one, and I'll come up with video 3. I don't know if it's going to be about the resistance and support, or how to use the patterns. Just not even that hard. You know, pattern breakouts. See that? Breaks below that pattern, take it. Bearish engulfing. Right around here, you could take the same position. Just a little sample. Broke out of that wedge, right? You didn't take this put. Just know that you're bearish because you broke out. Take the same level of that flag, right? The same movement, the same decrease to the bottom. See, and that's where it bounced. Right, you guys? Practice. Don't overthink about shit. Just look at the candle, read it clearly, learn them. You're not supposed to learn the thousands already. I'm gonna put the ones you guys are supposed to learn right on the Discord, and don't go crazy. Just chill out, relax. Don't try to learn all 20 of them in 1 month. You have 11 months to learn. 11 months. That's all you need. Alright, you guys. See you guys later.